Hello. So today is August 31st, 2022. The market's already open. We're traveling, so I didn't do my normal video. The story is basically we expected a decline starting on the 16th, potentially ending on the 30th, and I did a refinement on the cycles. It looks like, if you remember from last time, there seems to be a 2-week down move, 2-week up move. The monthly Rahu conjunct the moon is a sell point, which has already happened. Ketu conjunct the moon generally is a buy point. And we're coming up on that on the 31st or the 1st of September. So we're expecting, even though the market had a fairly severe break, we expected it wouldn't go below 4,000, went slightly below. And as long as it stays above 3950, then the fourth wave theory is still very likely, and we're still favoring that. If it does, however, the timing will remain the same anyway. The expected swings going forward will be the same, except we'll have probably a more bearish variation. At the moment, we think that we either had the A of a fourth wave or the completed fourth wave, and we're about to have a rally, and the rally should start on the 31st or the 1st. It should take off until the 7th or the 12th of September, and then pull back into the 16th of September, and then finally having its final rally high until the 29th or 30th of September. So that's the dates of the swings and whether they're highs and lows. The structure isn't 100% clear. If it is a fourth wave, then the expected fifth wave will take us above the 4320 up into the 44, I think 4450 potentially. If it is not a fifth wave, and indeed the bear trend which we're expecting to start at the end of September has started already, in which case the high at the end of September will be a high. It will be meaningful. Probably won't be able to hold your shorts against it. And it would be similar potentially to what happened in 1987. Not that we're going to get the crash size, but we had a high on the 25th of August there. It bottomed a couple times in September and then had a rally till October 1st before the real big move started. And we're expecting something similar, except this time the October 1st or September 30th high point is likely to be higher than the August 25th. In this case, the 26th high point. Now, of course, the actual high came out on the 16th, so the pattern isn't identical. But we're basically still bullish until the end of September, and I don't want to confuse anyone, but this Rahu-Ketu pattern, if you look at the chart, it goes back about a year, and during those years, the blue lines are the winning trades when you buy on Ketu in the moon conjunction and you sell and go short on the Rahu moon conjunctions. And you'll notice there's quite a few more blue lines than red ones. Actually, there were 21 out of 29 winning trades in the last year, and it turns out it was over 70% for the last year and a half. So I'm not betting against it. And also the exalted, debilitated moon cycle happens to line up pretty closely with Rahu and Ketu. That indicates a low early September and a high mid-September based on the moon alone. The 29th high is in September is not based on this cycle. This cycle will not be the cause of that. Something else will. All right, so that's number one. Number two, you should look at the pattern in the chart that you're looking at. There's a rectangle, dark blue rectangle on the left-hand side of the chart, and that is 9 months ago. It turns out to be 10 of the Rahu Moon synodic cycles. It happens to be almost exactly 9 months, and the low came in, I believe, on the 3rd of December before the final rally to January 4th in 2022. So the December 3rd of 2021 lines up with tomorrow, which would be September 1st. So it's not exactly 9 months. And notice the pattern on the decline was what we're looking at now. This chart was created a couple of days ago, so that rectangle ends on the 31st of August, the most recent, the one on the right-hand side, the one in the present market, ends on the 31st. So we're looking at a decline into the 31st, and with a low point above 39.50, assuming the fourth wave continuing to be a fourth wave. Then notice back in 9 months ago, you had a sharp rally and a sharp decline, and then a final new high in January. Something like that is likely to happen again. So if we go up into the 7th or 12th of September, that would be the rally phase. And then if we go down hard, that would go down to the 16th of September. And I know a number of people are looking at the 16th as an important low, but we're still seeing it as a relatively minor low on the way up to a final high. Either way, it is a low point, followed by a high in the 29th of September. All right, so our story is we're finishing a rally phase that started June 14th, and we're going to complete it probably September 29th or 30th. That right now we're in the fourth wave ending, and the fifth wave has not yet started. It's also possible the fourth wave will develop into a longer fourth wave with an up and a down into the 16th of September, followed by a rally to a fifth wave high in to the late part of September, maybe even to October 1st. That's the overview. Now, the second chart, you see in detail what I just said. It's comparing the two patterns overlaid one on top of the other, and you see there is a low on the 31st of August, a high on the 7th, a low on the 16th, and you don't see the final high, but it is there. It goes forward further until the 29th. Also, note there's a slightly higher high after the 7th of September, which may or may not happen exactly that way, but that would be the 12th. So that's why I say either the 7th or the 12th is the high, followed by a sharp break to the 16th and rally up to final high on the 29th of September. This is all short-term stuff. Our bigger story we've already discussed numerous times. We're looking at a very important high point in September, followed by a really severe decline. And that's similar to the 9 months ago when January 4th high, the beginning of the whole bear market, is like recycling here. And it's possible that till the end of the year, at least until late November, possibly we mentioned until December 10th or 15th, when the 20-year cycle comes in, 20.16-year cycle comes in, we could see a decline. We're expecting new lows by the end of the year. So far, the momentum indicators that I'm using are already committing to a decline to at least 37.50. It's already happened. The setup is there. The mechanics are there. There's a high, it's about a 75% chance based upon this momentum oscillator that I developed that we will see 37.50. It doesn't call for when that will happen, and it's conceivable that it won't happen until late in the year. It's also possible the September 16th low, if I'm wrong about the fourth wave being a fourth wave, you might want to short it on the 7th or 12th for a decline to possibly the 37.50 area. It's a secondary possibility, but it is possible that 37.50 will happen on September 16th, followed by still a rally till the end of September. And then the good stuff, if you're short, the big decline would happen after that anyway. So 37.50 may just be a support level that it bounces off before going lower later. The bigger story is if we do go lower and we do break the 3,600 area, we could go to 3,400 or 3,200 by the end of the year. And we've talked about this, repeatedly over the various weeks. All right, so on that note, we'll be buying. We already did today. And we have a hedge on a short because the market went deeper than expected, a little bit anyway. And because if it does take out 39.50 on the S&P, there's a good chance it is not a fourth wave, and that after the next rally for a week or so, we could go lower, and we want to have a hedge on just in case. All right, that's the story, and good luck trading.